Good morning, traders. Paul here with GammaEdge. Today is the 22nd of December, Thursday. Let's get started. Pause your players here. Read to the bottom. If you agree, hit that play button. Summary for today. Short-term model has moved to a new long. I will be entering at the open. Not recommendation advice for you. Do what you have to do, but nevertheless, the signal has presented itself, and I will do some initial trial balloons here. Long term, we are still cash or we are short, depending on how you look at it. The slopes of the ribbon are downward and they're pretty strong down. So this could fail at any moment to the upside, and that means you would be selling the rip. And that's kind of where my bias is, but I will play in the short term. SPX, right goalpost remains at 4,100. Hasn't changed. We did see a growth of the 4,100 and a reduction of the 4,200. So people are really starting to place their bets on 41. Minus X, the left goalpost remains at 38, solidly at 38, hasn't changed. And that is the line in the sand to the downside. We're mindful of support at 38.50. We don't think we're going to close below that. Anything's possible, of course. Overhead supply starts around 39.85, so we could see some monetization above that level. We don't think we're going to close above 39.60 today unless we see a significant number of OTM calls being added to the complex. And of course, the flip of that is that those in-the-money puts are closed. Transitions within the overall complex, whether it's the PM settled, the AM settled, or the combo, are all very narrow. The SPX combo complex is only like 4 strikes or 5 strikes wide. It's the first time in a long time. We're slightly below it, which is slightly bearish. We need to close above 39.05 to continue the advance and to continue powering the upside bulls here. The JPM short call strike at 38.35. It's in the money now because we're above it. It's been absorbed, and you'll see that in the iceberg chart. In play are those ITM puts that are now really starting to dominate the conversation as we roll into the expiries and we roll into next week. So just be aware of that. They really are driving the conversation. JPM is all but just more noise in FinTwit. The market model, as I said, we have a new long-term signal here, day one. A couple things, if you're watching this intraday within the Discord, when we get that first initial crossing, one of our members, JB, likes to take an initial early entry here. Of course, it is prone to potential failure, but he likes to take a new long position here. I like that also as a trial balloon. And in fact, I got into some Tesla earlier in the day and got into some Boeing, etc. When this was happening yesterday. When we get the moving averages starting to form what we call a railroad track pattern where they're all stacked above each other, that is another confirmation signal that you can progressively add. Again, not recommendation advice here, but this is how the signals progress. And you can see that we ended higher on the day from where we started, so that is a day up. And we did talk about yesterday about this being a consolidation day, so this played out exactly. I mean, this signal is just a solid signal. If you're not watching this, you're probably a little frustrated right now with this market. We're not. Looking to the longer term view, that's what this ribbon up here is. The long-term timer, is still in a downtrend. We measure that by the slopes of these lines and by the status of the line. So the cyan line is the slowest moving average. The red line right here is the fastest moving average. And when you have the slowest dominating the fastest, that is a downtrend. And so we're still weeks away, most likely, from seeing a sustained reversal, if we see one at all. We're not making any representations about what's going to happen here. We are in a short-term rally attempt within a much longer-term downtrend. Remember that. Don't fight it, and don't get out over your skis. We could continue north here today, which would be great for the bulls. We could break and fail, which would be great for the bears. You can make money on each side of this. So watch this. We have it for TradeStation, TOS, and TradingView. Key levels. A little bit of a change here. It moved up. This is the minus GEX signal in the SPX PM settled here on the left. Moved up from 3,800, so people are positioning just below where we are to take advantage. This also is the JPM strike. So just be aware of what's happening underneath us. Over here on the combo side, this is the first time the 38.35, which is that JPM strike short call leg, has appeared over in the master table, the combo table. It's notable. It's going to start dominating some of the key levels, and it's already hedged out, as I said earlier, but nevertheless, it's here, and so just be aware of that. No change. Left goalpost 38, upper goalpost at plus GEX 4100, COI, POI haven't changed forever. I will note the expected move for today is lower. We've been dropping day over day, and this is just increased decreased volatility, excuse me, due to in part that we're rallying, and in part that we're in a holiday season, and volume in general is falling down. So there we go. The PM settled complex, pretty important to understand that the transition range has really narrowed. 1, 2, 3, 4, 5 strikes. And so getting up into this area above this would be great. And I've highlighted a couple areas that I'm really starting to see some positive calls going in, puts being closed. It's really great for the bulls. And this PM settled complex is the trading instrument of choice for many people. So this is constructive for the bulls to the upside. Here's that JPM 38.35. As I said, it's nothing muffin, but it is for the PM settled. It is the downside line in the sand, no question. Taking a look at the 0 DTE, this is what's coming off today. Not a very strong one up here, but nevertheless, again, fairly tight range. You can see the distribution. More negative coming off, or put-dominated gamma coming off than we have in call-dominated gamma. So that's very interesting. If we keep losing the put-dominated gamma, that makes the entire structure more positive, and that's a good thing for the bulls. So we close right in transition. We see this all the time. This actually was at the high of yesterday's transition range. The 0 DTE action yesterday added to showing that we had this flip in sign here from a negative to a positive to a negative, and we ended up closing, as you can see, right in that particular zone. As the transition narrows here, and we see these additional calls go in from a delta perspective, that is constructive to the bulls. And we think a couple different areas that we'd be looking at to have some influence today: 39.25, 39.30, and then again, I don't think we're going to get much higher due to the 0 DT action up here at this 39.60. We might, but I think most of the action is going to play in this area. The 1 DTE, so this is our projection of tomorrow. Very balanced, right? So you can see the distributions from a gamma measurement side are very very balanced and offsetting. A little wider transition. Part of that is just due to puts being closed down below us. So these are out of the money puts that are people are thinking, well, in the short term, the 1 DTE, because this is what expires tomorrow, we're probably not going there. So they're taking whatever time value they have and taking it off the table. That's why we're seeing a tremendous growth in the green deltas, which are call dominated deltas. These are in the money, which is good. Again, upper range 39.35, 39.40 projected. So again, that overlaps the previous range in the 0 DTE. So we don't really think we're going to get much higher than that today. And there's some serious overhead still in the money puts up here that are dominating the conversation there. Taking a look at the combo, here's that 4,000 strike, COI, POI, so call open interest, put open interest. It's been there forever, locked in, doesn't really matter. Not very liquid, of course. Here's that tight SPX combo range that I was saying, 4 strikes wide. It's the first it's been this wide in a long time, so we want to watch for a break to the downside or watch for a break to the upside. The bulls will be emboldened if we can get above the 39.05 area and start moving up into this zone. And if we continue to see more green develop on the delta side here, that means puts are being closed and money puts are being closed and calls are being added, which would be very constructive for the bulls. To the downside, you can see still have quite a bit of put-dominated structure below us. So although we are starting to flip, we could go either way. So don't get out over your skis yet. We're in day one of a very short-term error-prone or failure-prone signal on the cumulative tick. We are not out of the woods, and I don't want anyone to think, this is the Santa rally. No, this is just another rally within an overall long-term downtrend. So it can fail at any time. We are seeing constructive behavior in the combo, but this is not overwhelming, all right? So don't go there yet. Taking a look at the delta moneyness structures, calls over here, puts on the right. Calls are effectively being compensated completely out of the equation. There really isn't anything to talk about over here. Except to say, here's the JPM at 38.35, completely compensated here. Over here on the put side, we have the potential of seeing these close off, and that could give us a little more rally fuel. So this is the edge of this is the 0 DTE, and this is right up against the 0 DTE. So we have some in the money puts that are coming off either today. People will make a decision whether they want to monetize them intraday if they feel that they're at risk. I don't think they feel they're at risk. But nevertheless, the end of the day, this delta goes away, and the response from the dealers is going to have to be to buy to adjust for that, which could drive prices up even more. So we've got two of these. This is coming up next week for the end of quarter here. So just be aware of what's happening here. We've got some compensating going on for next week where we've got out of the money puts and some in the money puts. So these are limiting towards 0. These are limiting towards -1. These are limited already probably to -1. I haven't looked up the strike chains today, but in general, this is going to be fuel to the upside depending on when they're monetized. So sequencing, as you guys hear me talk about all the time, sequencing matters. If the market does nothing with SPX, the dealers will have to adjust their hedges as these deltas come off at the close. Taking a look at the overall structure, here's that 4100. The 42 has dropped relative to where the 41 is, and it's still there, but we're seeing some growth here in the 4100. Here's that 3800 line that I was talking about. Actually, this chart, looking here, this is the wrong chart. I am presenting the wrong one, and I apologize for that. Come into the Discord, and the updated one is posted. I didn't update the deck here, and so I apologize for that. So with that, come into GammaEdge.us, 14-day free trial. You can get that chart that I was just talking about, as well as lots and lots of other stuff. 14-day free trial, all the tools turned on, no risk to you. You can quit anytime. So just come in, kick the tires. Follow us on Twitter, please, GammaEdges with an S. And then here on YouTube, if you like today's content, let me know by smashing that like button. It tells me immediately that I'm providing what you need. And I will continue to do so. And then, of course, subscribe to our channel because Taylor, myself, and Michael, when he gets his voice back, will continue posting videos to let you know what we're seeing in terms of delta, gamma, and just strategies to think about as we navigate the market. So with that, bid you farewell. Hope to see you in the Discord. Make it a great Thursday. Thanks, everyone.